Imagine this. It's June 2026. You have exactly $10,000 sitting in your bank account. Not $100. Not $1 million. Just $10,000. And you can only choose one. Gold or stocks. One could help grow your money dramatically over the next decade. The other could protect you if the economy gets ugly. And here's the scary part. Millions of people are making this exact decision right now. Some are rushing into gold because they believe a market crash is coming. Others are buying stocks because they think AI could create the biggest wealth boom in modern history. So, who's right? And if you were investing today, which side would actually win? Stay with me, because before this video ends, you'll know exactly how gold and stocks compare in 2026, and you'll discover why most investors are asking the wrong question. Let's begin. For years, the answer seemed obvious. Stocks. Historically, stocks have created more wealth than almost any other asset. People invested. Companies grew. Investors got richer. Simple. But then, everything changed. Inflation surged. Interest rates jumped. Wars and geopolitical tensions increased. Banks collapsed. Government debt exploded. And suddenly, investors started asking a question they hadn't asked in years. What if the stock market isn't the safest place anymore? That's when gold came back into the spotlight. Because whenever fear enters the market, gold becomes the star. Investors call it a safe haven, a place to hide when everything else feels uncertain. And in 2026, there is no shortage of uncertainty, but here's where it gets crazy. At the exact same time that fear is pushing investors toward gold, AI is pulling investors towards stocks. And not just any stocks, some of the biggest companies in the world. Companies that could benefit from the largest technological shift we've seen in decades. So investors are caught between two powerful emotions, fear and greed. Fear says buy gold. Greed says buy stocks. And this battle is becoming bigger every single day. Let's start with gold. Why do people love it so much? Simple. Gold doesn't care who's president. It doesn't care which company wins. It doesn't care whether AI succeeds or fails. Gold has survived everything. Recessions, wars, financial crises, market crashes. Think about that for a second. Companies come and go. Currencies rise and fall. Entire industries disappear. But gold has remained valuable for thousands of years. That's why investors buy it. Not because they expect to get rich, but because they don't want to get poor. And honestly, that's a huge difference. Most people focus on making money. Smart investors focus on protecting money first, because losing 50% of your wealth hurts far more than missing out on gains. Imagine waking up tomorrow morning. The stock market is down 30%. News channels are panicking. Investors are terrified. What happens then? Historically, money often flows into gold, because when confidence disappears, people start looking for safety. And this is where everything changes. Many wealthy investors don't see gold as an investment. They see it as insurance. The same way you buy home insurance hoping you'll never need it. You buy gold hoping you won't need it, but just in case. It's there. And in today's world, there are plenty of reasons investors feel nervous. Rising debt, political uncertainty, global conflicts, economic slowdowns, all of that makes gold look attractive. But before you rush out and buy gold, there's something most people don't know. Gold has one major weakness. A weakness that many investors completely ignore. Gold doesn't create anything. Think about it. A company can launch products, hire employees, generate profits, expand globally, pay dividends, create innovation. Gold does none of that. A gold bar sitting in a vault today will be the same gold bar 10 years from now. No growth, no cash flow, no innovation, nothing. The only way you make money with gold is if somebody else pays more for it later. That's it. And that's where stocks have a massive advantage, because stocks represent ownership in real businesses. Businesses that wake up every day trying to become more valuable. What happened next shocked investors. Because when people started comparing long-term returns, stocks weren't just winning, they were dominating. Now let's talk about stocks. And this is where things get exciting. When you buy a stock, you're not buying a piece of metal, you're buying a piece of a business. A business that is actively trying to grow every single day. Think about the biggest companies in the world. Technology, healthcare, finance, energy, AI. These companies are constantly creating products, finding customers, solving problems, making profits. And when they succeed, shareholders benefit. That's why stocks have historically generated extraordinary wealth. But in 2026, there's another reason investors are excited. Artificial intelligence. Some experts believe AI could become one of the biggest economic revolutions in history. Entire industries are changing. Productivity is rising. Businesses are cutting costs. Profits are improving. And investors want exposure to that growth. Because here's the reality. Gold can't benefit from AI. Stocks can. Imagine two investors. One buys gold. The other buys shares in companies leading the AI revolution. If AI transforms the economy the way many expect, the difference in returns could be enormous. But here's where it gets crazy. The same thing that creates opportunity also creates risk, because expectations are now incredibly high. And whenever expectations become too high, disappointment becomes dangerous. Here's where most investors make a mistake. They think they have to choose sides, gold or stocks, safety or growth, protection or opportunity. But what if that's the wrong way to think? Because nobody knows the future. Nobody. Not YouTubers, not economists, not billionaires, nobody. The future could reward stocks. The future could reward gold. The future could surprise everyone. The real surprise comes later. Because history shows something fascinating. The investors who survive uncertainty aren't usually the ones making bold predictions. They're the ones managing risk. They're the ones preparing for multiple outcomes. And that's called diversification. Let's go back to our original question. You have $10,000. Gold or stocks? The answer might disappoint you, because the smartest strategy often isn't choosing one. It's understanding what each asset is designed to do. Gold is protection. Stocks are growth. Gold helps when fear wins. Stocks help when innovation wins. Gold protects. Stocks build. And in a world as unpredictable as 2026, there is a strong argument for owning both. Because if stocks soar, you're participating. If uncertainty rises, you're protected. That may not sound exciting, but investing isn't supposed to be exciting. Most people who chase excitement lose money. Most people who manage risk keep it. And that's a lesson worth remembering. So let's end with this. If the economy stays strong, stocks could outperform. If uncertainty increases, gold could shine. But the real lesson isn't about gold versus stocks. It's about understanding why you're investing in the first place. Are you trying to grow wealth? Protect wealth? Or do both? Because once you answer that question, the debate becomes much easier. And maybe the smartest investors were never choosing between gold and stocks. Maybe they understood the value of both. Now I want to hear from you. If someone handed you $10,000 right now, what would you do? Gold or stocks? Comment below, Team Gold or Team Stocks, and let's see who wins.